Welcome to TradeTheMBI.com. This is John. This report is for the 12th of May. Kind of a boring day the other day. We started off with some weakness and, as we've talked about before, got bought up. We do have some more interesting international things brewing. The war with China is escalating, and I say war because we've de facto been at war since they've gone into this battle of words over who's responsible for the virus. But from a market standpoint, we still have our continuing declining Fibonacci 100% line heading towards price. It's right within the expectation. The continued rising shakeout, so as long as it's going, and now the proverbial meeting of Azure is negative 142. We got blue at negative 2. Gold at negative 142. So Azure and gold have already met, and blue is just about there. And usually when those all connect, then we get a little bearing on the potential for direction. But again, every time we hit key resistance points, the Fed steps in, buys up supply, and maintains things. But this is an interesting one because now we're seeing the divergence between the NASDAQ and the S&P. And you already have cyan under red from a NASDAQ standpoint that you don't see on the S&P. So the broader market is not reflected in the power of the tech giants that are moving forward in this lockdown configuration. And that disparity is going to be interesting because you could see the power of potentially propelling the market to record highs as soon as regular business activates. And that would be an interesting one to see. It would be a shock to so many people who have been, predicting doom and gloom because they just don't understand the creation of artificial money and that inflating power, as well as the devaluation of general currency. And the markets need to factor that in with a multiple increase in market price just to make up for the devaluation of the dollar, because they're not going to take a haircut. They just won't do it. From a euro standpoint, still at the very bottom end of the range, but holding beautifully. The central banks are all in alignment. As you can see, we've maintained this bottom at the 108 range that we've had for, a couple of years, with the high side up at the 115. And talk about perfection. I mean, these guys, they are that good, and they're able to maintain it. Whether we continue to see any tensions build with China, I don't know that that's going to have much of an impact on oils, particularly when you have the Iranians now offering prisoner swaps with the U.S. So clearly they have come around from their militant attitude and wanting to have some kind of negotiated dialogue. So that's an interesting development. And if there are no tensions, oil's not going to go anywhere, and that's really going to be a real clear indicator for us economically, because if supplies begin to diminish, we've already seen the Saudis cutting additional production, so that would be the first press in price moving back to normalization. We're still a ways off that, I think, at this particular point, but it's going to be critical because that will be the inflationary canary in the coal mine that we will have to be looking for, because that could put market pressure to the downside if there's a rise in inflation, because we've already increased debt by another $5 trillion, but it doesn't really mean much when you have zero interest rates. It's sort of irrelevant at that particular point. It's only when those rates have to start rising. As long as the Fed's willing to keep them at near zero, you're going to get an outside inflationary push of the value of the indexes, i.e. S&P, Dow, NASDAQ, without a corresponding inflationary or debt pressure price, because you're not having to pay anything extra on that debt if you're not charging interest on it, or if it's at such a minute value, you're making it really almost negative rates because of taxes and that. Gold still holding at this particular point until there's any inkling that there's price constraints. It's going to remain the same. We look at our 5K and just so clean. I don't even need to really put any lines. I mean, we had that early drop in futures that then took up to new highs, developed to magenta. We ended up making new lows right back to exactly the same algo level, 28.92 that we've had marked, that we keep seeing. Every time we get there, you get additional buying value, and that's exactly what happened. Produced the orange candle in this particular case, but very clean from a power mode 2. It was the only dip of orange. Right here you're coming down and you get this low reading from the power mode 2 of the cyan, which means you're getting it as near zeros. But in this particular case, you have orange in between red DOC and cyan, which is continuation, and that's exactly what you got. And then right at the end of the continuation, the orange dips below white, and that leads to the build, which takes us all the way back up to the zero. So, you have this minus, 20 plus points, and then move right back up the 20 plus points. And then as the day progressed, we sort of eased off and filled in. Okay, we got positive extremes that started right here at the lows, right around that 29, 20 range. And then sure enough, by the end of the day, we filled those exactly. Then came back down to, guess where, that exact same 28.92 range, just slightly above it. So there was buying starting to, because see, this is what people were starting to anticipate, the dip to it. And they're like, well, I better get in early because I'm not going to be able to get it, as soon as they spike it from there. And that created a big spike, and that's what's continued all the way to right now. And that's why we're just a plus a fraction at this particular point, simply because you're always going to see that. You have to get in before the big boys in order to get filled, and that automatically creates a floor, which then you have to build up from. And then you wait for the exacerbation point where it goes too far, and then you have your points for refill with positive extremes. Rinse, repeat, keep doing this week after week as long as the Federal Reserve has decided to buy up everything under the sun. That's pretty straightforward. It's not based in any logic of fundamentals, because this is not really practical at this particular point. So we adapt to what the algorithms are doing, and the algorithms are pretty clean, and I think it shows very nicely on our charts, so it's a nice thing to see. As always, I will keep putting up charts that are relevant, but this was just some beautiful action with the orange caught between the cyan and red for the continuations, to the cyan and the reds for the longs. DOC spreads all working out beautifully. It's good stuff. As always, though, trade well. We'll talk to you later.